On board then Sandip Sabharwal, who's joining in on the fundamentals. And Sandip, what's your outlook on the fact that when it comes to the frontliners, it's the metal space that is managing to buck the general trend. Do you believe that we could see some, incremental traction play out within this space for the long haul as well?
I personally don't think so. I think it's more a musical chairs kind of thing which is playing in the markets where sectoral rotational is happening. Markets are not going too much up or down, and it's more a function of a lack of conviction, largely among investors, I guess, about the direction given the news flow which comes out on a periodic basis about potentially higher interest rates and its impact on the markets.
So, Sandeep, what do you do in this market right now? Are you spotting opportunities to buy in this kind of time-wise consolidation which is taking place?
I think sectorally, there are some sectors which we should be avoiding, for example, largely like technology, because there are still a lot of uncertainties around chemicals and related spaces because Chinese supply is increasing and their demand is still subdued. So I think the pricing could trend down, etc. While domestic links sectors are still looking okay. So I think on weakness, four-wheeler auto stocks could be bought. I think the entire infrastructure, construction, capital good space has good traction going for it despite slightly higher interest rates. So I think those are the sectors which I think still offer opportunity.
I would urge our viewers to stay tuned in. We've got, I would say, another mega exclusive. India's largest private sector bank, the CFO, in its first television interview ever. The CFO of HDFC Bank, with where the CASA ratio of the bank is headed, how are they growing at a rate which is at a large balance sheet, which perhaps is the second largest balance sheet only after SBI, is growing at 15% plus. And what are they doing in order to ensure that the merger process really goes through? So that's one interview you certainly don't want to miss. Stay tuned tomorrow morning, all day tomorrow on ET Now, the CFO of India's largest private sector bank. Sandip, what would you like to hear from HDFC Bank? I mean, they are growing at an enviable rate now. Their CASA ratio is decent. And when world is struggling for deposit, at least when Indian banks are struggling for deposit, they've done a great job of adding new customers.
So the deposit accretion has been one of the strongest, and to that extent, they obviously so it's all about deposits in a rising interest rate environment. So that's why I always say that the larger banks have a clear advantage over the smaller ones in a tightening liquidity and rising interest rate environment. When it reverses, then the smaller banks tend to have a greater delta. So I think things are going decent for them. The only thing is uncertainties around any relaxations they'll get on the margin related to SLR, CRR, etc., which I don't think they'll get. And to that extent, they will need to increase the deposit accretion at a much faster rate, which will be tough, at least on the CASA side, because that grows only at a steady clip. So I think it will be more from the term deposit side.
In this year, actually, HDFC Bank has done much better than what ICICI Bank and Kotak Mahindra is doing. Sandeep, where is Kotak Mahindra Bank now? I mean, it's in a very unique position, which is that they don't have a subsidiary which is listed. They don't have a, excepting Kotak Securities, they don't have a number 2 or number 3 stock, spot in the life insurance business or the general insurance business, and even in the securities business. So where is the standalone franchise like Kotak Mahindra Bank headed when they are, in a sense, they are not growing the balance sheet as per what other banks are growing?
See, franchises like Kotak Bank or on the NBFC side, Bajaj Finance, etc., had a special role at one point of time because they were going at a rate faster than the market, and they were keeping their asset quality much better than the market even while they were continuing that growth. And that was a story till 3-4 years back. In the last 3-4 years, lot has changed. Most banks have similar NPA ratios, similar growth, like 1 or 2% here or there, and Kotak Bank, to that extent, has lost out somewhat in growth earlier as they were cautious. Now they're trying to pick up. But on valuations, if you see, they are the most expensive bank, even more expensive than HDFC Bank still. And obviously, Bajaj Finance is still much more expensive with no reason why they should be so expensive. For example, they trade at twice the price to book to of Axis Bank. Now, do they should they be trading at twice that valuation? So I think that's the issue with Kotak Bank, and to that extent, I think there's still a long phase of consolidation ahead for them. I don't see significant returns from Kotak Bank anytime soon.
Exactly what we were talking about yesterday as well, right? The kind of, divergence that you are seeing within banks. We were talking about HDFC Bank, about 2 or 3 odd percent away from its 52-week high. ICICI Bank still skirting around, or I think 700 could be a good base for that one. You would know better. And then Innocent Bank, which is just showing so much buoyancy off late. How do you now deal with the entire banking pack? Do you bet on the horses which have not participated this year, or do you stick with the leaders?
Yes, you stick with the leaders. I think HDFC Bank is a classic case over here. The stock has been a big underperformer. But then, an underperformer for 2 years, 3 years does not generally continue to underperform. There is bound to be a phase where the stock would not just play a catch up with the overall mean reversion or the underperformance from the other peers, but even show signs of strength as well as a comeback. I think we've started to see some signs emerging, at least so far this year, with the relative strength coming back into the likes of HDFC Bank. My sense is that one of the major reasons why the Bank Nifty had been unable to break past about major levels on the upside and the momentum was not too much strong was because of the lack of participation from these private sector names. But then one by one, these large cap private sector banks, I think except for the likes of Kotak Bank, are making a very strong comeback for themselves. So I would probably believe that it's a good time to try and chip into these names from a medium to long term play. The fact that these stocks have been big underperformers also makes the risk reward as well as the time wise risk reward very attractive. So HDFC Bank, ICICI Bank, even IndusInd Bank, I believe are few attractive plays from current levels.
If you think about it, this year actually there is no stock which is the meme stock for social media. 2 years ago it was ITC, then it was State Bank of India, then it was HDFC Bank.
Maybe
Adani
new age
names.
tech.
No, Adani not spend. Adani is like the long await in terms of a stock participation is Adani is the reverse. I'm talking about, let's say, an ITC or in State Bank of
ITC
India.
was most mean when it was the underperformer, right?
Yeah.
And so is the case with Adani names.
Adani's come back.
Yeah.
Adani's actually come back. I mean, it's
That
come back to
means both
reasonable.
ways, when it does bad and when it does good.
It's getting a lot of attention for sure. I mean, that's for sure. Nuresh, Sandip, is it a good time to buy into the distress of rural economy? I mean, it's now almost public information and general knowledge that the rural India is under pressure. Retailers are admitting it, something which they were not acknowledging it. Do you think markets are factoring that in? And if anything turns, it's going to be on the uptick now?
Yeah, I would like that largely it's turned in, it's been factored in because inflation, high inflation, like increasing inflation was more a 2021-22 kind of story when and the time when RBI actually said there is no inflation. At that time, the inflation trajectory was very high. All of us listened to company managements, etc., and they were saying that they have not seen this kind of inflation in the last 20, 30 years. Now I think all those things have moderated. All companies are saying that they are not going to take price hikes. In fact, there are promotions, price cuts happening across many categories. So I think as inflation moderates, which it's already happening, we'll see the demand come back happening. And if that's also combined with decent crop prices for the farmers, etc., then that will also aid the recovery.
All right, the entire sugar cluster as well has been in the spotlight. Let's hear it out from Pramod Patwari, the CFO at Balrampur Chini, who we interacted with earlier. He says that international sugar prices have been decoupled from domestic sugar prices. He also shares his outlook as to when he believes the government will relax the export cap. Listen in.
So as far as the international sugar prices are concerned, we are of the view that international prices are somehow decoupled with the domestic prices. The reason behind 6 to 7 years of international high sugar prices is there is some sort of physical tightness into the system in terms of gaps, availability gaps. Though overall there will be surplus at the global level. But in the interim period, as because the logistical issues are there in Brazil, there is some physical tightness. Domestic prices has not really moved up in last couple of years, though the cost has increased significantly.
Okay, just let's get in a quick chart check then on some of these sugar stocks as well. And Naresh, what did your take? Seemed to be very flash in the pan move yesterday.
So I would say it is something where a base building formation is happening, and the sugar spot prices have already broken out. Now it's time for slowly and steadily all these sugar names to make a comeback. So if you look at Balrampur Chini, yesterday's move was again a retest of that 400 to 410 mark, which is the high for the last almost 8 to 10 months. And the stock has gone through a sideways consolidation, a very tight one, 330 to 410. And over the last 3 months, it is between 360 to 410. So it should spend some time here before that breakout above 410 happens. So constructive on the whole sugar space. It would be a slow and steady move, unlike the flashy moves which it has seen before. Same is the case if you were to look at a Dhampur sugar or any of the sugar names. You will see most of these names have consolidated in the 20% range for the last 8 to 10 months. So bullish on sugar names. This fade-off move, say a move back to 390 to 385 on Balrampur would be a buying opportunity.
Sandeep, same time last year, the easy trade was buy commodity producers. Any company which is into commodity, buy commodity producers because inflation was going high. Now that things are reversing, inflation is topping out, commodity prices are coming down. Is it time to go back to commodity consumers now?
Yeah, and see, the commodity consumer trade started a long time back. So, and the move in many of the companies they actually consume, like the plastic processing companies, which actually suffered a lot when the prices shot up, they benefited a lot. Many of the auto companies, tire companies, or anyone who consumes, or even some of the consumer companies are benefiting because of the fall in palm oil prices and other input prices. So I think that trade is already on, and I think it will only become stronger going forward because the big driver of a commodity up move has to be Chinese demand, and given the way the Chinese economy is performing despite last year being a COVID year, so I don't think there's going to be any huge commodity demand comeback happening anytime soon.
Good to have you on the show. We'll let you go on that note. Let's take